All right, let's get into it. When we talk about nuclear power, it's usually all about the science, right? Or the safety concerns. But today, we're going to pull back the curtain on something totally different, the economics. And it is a wild story. It's like a tale of two completely different kinds of nuclear plants here in the US. And the crazy part, the entire script is being flipped by artificial intelligence. Yeah, you heard that right.
So where does this all begin? Well, it starts with a problem that's simple on the surface, but absolutely massive underneath. See, for all its magic in the digital world, AI has this hidden, real-world appetite. It's just incredibly hungry for electricity. And that hunger isn't just growing, it's about to explode.
Wow, okay. And this chart right here really puts it into perspective. Just look at the scale of this thing. Projections are showing that by 2030, data centers, and yeah, that's mostly AI, could be eating up as much as 17% of the entire US electricity supply. I mean, that's not just a little bump, that is a seismic shift. It's a total game changer, and it's forcing us to rethink where we get our power from, especially power that's reliable. All right, so here's our game plan for today. First, we'll dig into that insatiable demand from AI. Then we'll look at the gold rush happening for the old guard nuclear plants. After that, we'll tackle the big puzzle, building new ones. We've got a fascinating business model twist to uncover, and then we'll wrap up by identifying the real bottleneck that could stop this whole thing in its tracks.
Okay, so Section 1, AI's insatiable demand. It really is this huge, nonstop need for power from AI that's lighting a fire under this whole thing. It's the why now. It's the reason nuclear is suddenly front and center again.
So, what does this actually look like in the real world? Well, it starts with what we're calling the old guard. We're talking about the existing fleet of nuclear plants, the ones that have been humming along for years. For them, this AI boom, well, it's turning into an absolute gold rush. They're becoming straight-up cash cows.
Okay, so check out this number, 92%. Now, capacity factor might sound a little technical, but it's super simple. It's just how often the plant is actually running and making power. And 92%? That's insane. It means these plants are on churning out electricity pretty much 24/7. That kind of reliability, that's the secret sauce. It's the foundation of their entire business model.
And here's the kicker, the other piece of the puzzle. Once you've paid off the mortgage, so to speak, once these plants are built, they are shockingly cheap to run. We're talking just over 2 cents a kilowatt hour. So think about it. You're running almost all the time, and it costs you very little to do so. When electricity prices are high, you are just printing money.
But what if prices aren't high? Well, that's where this comes in. The government has actually put a financial safety net in place. Now, this isn't some bonus they get in the good times. Think of it more like insurance. It's downside protection. If electricity prices take a nosedive, this tax credit kicks in to stabilize their income. It just makes them a much, much safer bet for investors.
And this quote just nails it. The key to making money for these old plants isn't really about getting the absolute top dollar for their electricity. It's about how much of their huge fixed costs, the staff, the maintenance, they can spread out by just running all the time. That constant operation, that's their superpower.
Okay, so this all leads to a really obvious question, right? If the old plants are such cash cows, why on earth aren't we just building a ton of new ones? Well, welcome to the new build conundrum. Because when you talk about building a new nuclear plant from scratch, you're talking about a totally different universe economically.
And this right here shows you the problem in black and white. For an existing plant, the risk of construction is zero. It's done. The money's been spent. It's a sunk cost. But a new plant? Oh boy, the construction risk is off the charts. The capital you need up front is massive. And honestly, you're not even sure what the final bill will be. From an investor's perspective, these are polar opposites.
And yikes, the numbers do not lie. If you look at the levelized cost, which is basically the all-in price tag to build and run something new, nuclear is way up there at over $81 a megawatt hour. Compare that to solar or wind, it's more than double. That right there is the fundamental economic roadblock you have to get over.
And if you want a perfect real-world example of this challenge, look no further than the story of Plant Vogtle in Georgia. This project has become the poster child, the ultimate cautionary tale for anyone thinking about building a big new nuclear plant in America.
So what went wrong? Well, for starters, the project was hit with delay after delay after delay. The new reactors ended up being finished more than 7 years late. 7 years! You know the saying, time is money? Well, when your project costs billions of dollars, 7 years is a monumental, almost unimaginable amount of money.
And the final bill? It just ballooned. The original estimate was $14 billion. The final cost was over $30 billion, more than double. Now, you have to understand, if a normal private company tried to build this, what's called a merchant plant that just sells power on the open market, a screw-up this big wouldn't just be bad. It would be catastrophic. We're talking bankruptcy. Game over.
So that begs the question, right? How on earth does a project that's so late and so over budget even get finished? How is that possible? Well, the answer is a fascinating little twist in the business model that makes this a completely different kind of animal.
The whole secret is something called the regulated utility model. See, Plant Vogtle wasn't built by some risk-taking private company. It was built by a regulated utility. And here's how that works. They get a monopoly in their area, and in exchange, regulators watch over their prices. But here's the absolute key. They are allowed to pass their big approved investment costs directly onto you and me, the customers. Let's just walk through this, because it's wild. Step 1. The utility spends billions on the plant. That big number goes into something called their rate base. Step 2. Regulators look at the costs and say, yep, looks prudent. Step 3. Those billions in costs get passed directly to customers in the form of higher electricity bills. And here's the best part. Step 4. The utility earns a guaranteed profit, like 10.5% on that whole massive investment. So get this. What would be an absolute financial nightmare for a regular company is actually a safe, profitable investment for a regulated utility. It's a completely different game.
All right, so let's tie this all back together. How does AI fit into this picture, and how is it shaking everything up? Because AI isn't just creating the demand, it's also shining a huge spotlight on the real bottleneck, the true obstacle in the way of a nuclear comeback.
What's happening is a complete change in how people think about these nuclear plants. See, big tech companies, they don't just need power. They need clean power, and they need it 24/7, no exceptions. So they're signing these super long-term deals to buy a plant's output. And in doing that, they're turning these plants from a risky bet on the energy market into something way more like a piece of infrastructure. Stable, predictable, like a toll bridge or an airport.
And this isn't just some theory. This is happening as we speak. You've got Microsoft backing the restart of 3 Mile Island. Yeah, that 3 Mile Island. Meta just signed a 20-year deal with a plant in Illinois. Amazon literally bought a data center right next to a nuclear plant in Pennsylvania just to lock in its power. Big tech is stepping in and becoming the anchor tenant, the guaranteed customer that basically removes a huge chunk of the financial risk.
But here's the final twist in the story. Even if you have the power plant ready to go, and you have a giant tech company with a blank check ready to buy the power, there is one last giant hurdle. And the real bottleneck, it turns out, isn't the nuclear reactor itself. It's the grid. It's the boring stuff, the transmission lines, the permits, the market rules you need just to get the electricity from the plant to the data center.
And here is a perfect, almost painful example. The company wants to get 3 Mile Island back online by late 2027. For Microsoft, great. But the studies for just connecting it to the grid, they suggest it could be delayed all the way to 2031. Think about that, a potential 4-year delay, not because of nuclear science, but because of paperwork and power lines.
So, at the end of the day, that leaves us with a huge hanging question. The demand from AI? It's undeniable. The ability of existing nuclear plants to provide clean 24/7 power? Also undeniable. We're even seeing the economics get twisted in these fascinating new ways to make it all work. But none of that means a thing if you can't actually deliver the electricity. It turns out the biggest challenge of our energy future might not be the complex physics of splitting an atom, but the surprisingly difficult job of just upgrading our electrical grid.